Yes, we are.
Okay.
Okay, you ready, Bob?
Why wouldn't I be?
All right. Happy last day of November 2020. How are you, Bobby?
I'm
Hey, you're-
fantastic, Matt. Last day of the month, I've gotten in more trouble trying to decide what's going to happen on the last day of a month or first day of a month. I was just telling Carly, and Matt, introduce Carly. Let's
We've
get
got Carly Gardner with us from DeCarly Trading, and she's been a long time futures broker. You've probably seen her before on Kramer's Mad Money. She's on about at least once a month, and you'll also find her on Bloomberg Options Insight at least once a week. So if you're in the trading world, you've probably run into Carly at some point. We've been friends for a long time. Beyond market, we've met in person. And Carly's based, I still think, in the Vegas area. Is that correct?
That's a true story. Yes.
That is a true story. So thanks for coming on today, Carly. We're always happy to have you with us here at Market Vitals today.
Yeah, it'll be fun. It's my pleasure.
Carly, why don't you give the viewers a little bit of background from your own voice? I have the screenshot from Amazon on here. Many books. Give us a little background.
Right. So I'm a futures and options broker. We run a little boutique brokerage shop here in Las Vegas. The name of it is DeCarly Trading. And I've written a handful of books throughout the last 10, 15 years. Geez, it's gone by quickly. The only books you really need to worry about that, if you, like you mentioned, if you go to Amazon, you'll see quite a few, but we've switched publishers and we've republished and refreshed all of the information. So the only ones you really want to pay attention to are the newest is Commodity Trading with Creativity, Higher Probability Commodity Trading, and then the third edition of A Trader's First Book on Commodities. In theory, that should teach you everything you need to know, except for actually, experiencing the emotional turmoil that comes with trading. Most things should be in those books.
Fantastic. Matt and I we've been friends here. We both quit the Midwest. Matt much earlier than I did. I actually stuck it out on the trading floor until they swept me out. But we both ended up in Bend, Oregon, and we've come together here to build out MarketVitals.io because not only do you need the nuts and bolts of how to trade, but we feel a community based on honesty and an integrity. And, I said to him, one thing that was great about the trading pit is you could be rivals with somebody, but so many honest conversations went on in those pits about risk and reward, about trade setups. And so we try to come at the market from, most importantly, just an honest viewpoint of the risk and reward setups that we're seeing. So just give us your thoughts on that. That'll be awesome.
Oh, absolutely. So unfortunately, the first thing I learned when I got into this business was there's some shady characters and some snake oil salesmen. So you have to be really careful. It's really important. And that's one thing that I focus on in all of my books and webinars and things that I do is there's when it comes to commodity trading, there's obviously a lot of reward. That's what everyone likes to talk about, but there's just as much or more risk. I've seen people make or lose a lot of money. It's not easy. There are no guarantees. And so it's really important that people understand what they're getting into. We've actually shifted quite a bit in the last couple of years. We've shifted. It used to be, if you would have talked to me 3-4 years ago, we probably would have talked a lot about option selling. We've kind of gotten away from that with algo trading and things like that. The market volatility has gotten to a point where option selling really just doesn't work. It'll work for a year, maybe 2 years, and then it only takes one bad week to wipe everything out. And so we learned that a few times and realized that we've shifted more to option spreads where you're using the market's money, you're financing your trade, but your risk is limited. And so it's worked out a lot better that way. If you are in the wrong place at the wrong time, you can survive and move on to the next trade.
Yeah, back spreading is always a great strategy, Carly, from stocks to futures to, and that's basically, as in my opinion, you're still selling the option, but you're buying a further out option so you don't have unlimited risk. Which
just in case. Most of the time you don't need it, but it's just that one time that you did, it really can wreak havoc. So
Exactly. So I'm a big proponent of backspreading myself, always have been. So, that's good to hear. And I have no problem selling options naked either still, but it's not for the uninitiated. And I would tell
Sure.
people, if you don't understand what we just said, then
Right.
don't
Don't do
even
it.
think about selling
Don't do it.
options until you
Exactly.
understand what that means.
You know what's ironic? I think in the last several years, obviously technology's gotten a lot better. People have access to better trading platforms and option analytics and all these types of fancy things that we used to only
Home.
reserve to some of the
Yeah. Yeah.
pros. Yeah. But the problem with it is I think it makes people a little too comfortable, especially option sellers. I talk to people all the time that are trading on their own deep discount, but they have fancy software that tells them that a certain option has a 99% chance of expiring worthless. And then they put that trade on and they just hang on to that figure for the duration of the trade. And we all know, even if the odds are that way today, it doesn't mean that's going to be the same tomorrow. Things change, but people just have
They
kind of a
get
false sense
stuck
of
in that.
security. Yeah.
Yeah.
You
And
know, Carly, I have too many years on the floor and therefore too many terrible, euphemisms. And one of them is if you sell cab long enough, you're going to be driving one.
Sure. Yep. Sounds about right to me.
Hey, Carly, we've been talking, kind of the macro picture when it comes to, the majors, from the indices to the interest rate bond products, from the 10-year, 5-year, 2-year, the soft commodities. Bob and I have been talking about these for the last month or so on our daily show. What are some of your macro thoughts? First of all, 2020 has been an odd year for everybody. I've got to ask you,
Yeah.
what have the volumes looked like? What does the participation look like from a brokerage side of business? Has business been really good for you because of this volatility? And what does it look like as we finish this crazy year and come into 2021 with possibly a new president or a continuation of a president,
Sure.
right? So we're curious kind of what your macro views are on, across the board, if you'd like to touch on some areas that you're
Sure.
watching.
Yeah, so from a brokerage standpoint, I can tell you volatility in March and April really wiped out a lot of speculation. And so for a couple months, it was a little rough. People were scared to, especially anyone that was trading crude oil in that during that time, was really scared to dip their toes in. Plus, to be fair, even people that wanted to participate were kind of pushed out because the margins were extremely high. Some brokerages were blocking people from trading crude oil altogether, regardless of how big their account was. So there was a lot of weird things going on in 2020, but liquidity has come back. People are starting to trade again. They're getting a little more comfortable. They've probably changed their strategy a little again, less open-ended risk and more option hedges and trading and things like that. So it's definitely been a shift in mindset, but speculation's coming back. With that said, I mean, we've seen some really big moves in 2020. I tend to think some of them have been carried away. A lot of it has to do with what we've seen in the dollar. The dollar is trading near multi-year lows. I happen to think the dollar is probably bottoming out. There's a lot of bearish sentiment out there, and I think that trade's a little overcrowded, but that's just my opinion. If that happens, I
My
think we
opinion matches your opinion. So
okay, that's good to know.
Yeah.
If that does happen, I think we see a lot of these rallies that we've seen in the last couple of months fizzle. So the grains, soybeans and corn, I think are a little overdone on the upside. My guess is copper is probably putting in some sort of a blowout top. So that's going to be interesting to see what goes on there. I've been long-term bearish gold and silver for a few months now. I think that trend continues, but I do think we're probably getting to a point where maybe we get a short-term bounce. But anything really dollar related or inversely directly related to the dollar, I think is going to have a rough time.
Yeah, I agree with you. What about the macro idea, though, that we're starting to see food shortages? Not necessarily here in North America, but we are seeing them, in Europe, and we are seeing them. I talked to some people that were up in, the islands, the Orcas over the holiday weekend, and the food lines they said were pretty amazing, and just a small community up there, and the San Juan Islands. So, and the Orcas. So I'm curious, what do you think about the macro idea that food may become much more of a, a supply constrained item?
Sure. I mean, I think that's definitely a big macro story. In the long run, I think will play a big role. In the short run, commodity traders and the markets tend to be short-sighted. And so I'm not, I think that we'll probably see some deflation in some of the food products, at least on the futures side, at least for now. That said,
would you buy that weakness then, with the backdrop of possible, you know, scourge going on in the foods?
Sure. Yes. If corn and soybeans get down to a level that I think are a little more reasonable based on the current fundamentals, absolutely, I'd be a bull. I mean, when I say I'm bearish soybeans, I'm not talking about forever. I'm talking about maybe for the next couple of months.
Yeah,
and so if we take some of the froth out, absolutely, I think being on the upside is the best trade. Same with the meats. I think I don't really have a strong opinion in hogs at this point. Cattle, I think, are probably a little overpriced, but if they come down, I'd be willing to play the upside for sure.
Yeah, I'm gonna show my screen while you talk a little bit here, Carly, and I'm gonna bring up beans. Again, short term. This is a 89-minute chart,
Okay.
very extended. Point of control. The way I look at markets is way down here at about just over, what is it, 1050 or so. And we're trading 1170 as we speak, or plus or minus. I'm a little delayed here in my feed on this chart, but yeah, I agree with you, and you can see it's kind of rolling over here. And if we start to bust through that 1160 level, there's definitely some pockets here that need to be kind of fixed up on the chart for me.
Right.
And and it tends to move pretty swiftly, but again, if you do your homework, I like that 1050 level a lot. I mean, I would probably be looking to buy some if we pulled down to that level.
Yeah, absolutely. I think that's a great level. I'll be watching for that as well. If you look at a weekly chart in soybeans, we've really seen rallies like this, a couple of times in the last several years, and they really have a hard time holding. It's hard to sometimes figure out where the exact high is going to be, but once that high is posted, they tend to collapse pretty quickly. Right. And so we're hoping we get something like that.
And again, the trampoline effect, again, back here, 1050 down to, the 9 or the 850 level. I would love to buy that 850 level, of course, but it's not going to be there today. But again, I think that 1050 down to 850, brings risk and a lot of support. You've got years, really 5-6 years of buyers in that level. So, I don't see it going to zero. That's the great thing about commodities, is there's always a demand for the products. So, I agree with you here. I think it's a great call.
You know what I think that you have to keep in mind here is the China dynamic and the dynamic in China that is there is no good information, really good information that you can trust. But if you look at the exports, they're absolutely through the roof. And if you look at or try to find out exactly what there was the whole story about the Three Gorges Dam maybe giving way, massive flooding. And there's just not great information on what kind of destruction that did to them in China. But if you look at the snail's leaving the trail because the imports are through the roof. And we talked, Matt, I think last week or the week before, about the propaganda inside China about not wasting food. And a lot of people saying that if that is the propaganda, there surely has to be some sort of problem with their food supply if they're actually filming commercials with Jack Ma telling people to finish their plate. I don't think you can ignore that. Obviously, soybeans have put in this huge spike. Can it redo what it did in 2012? I think the whole story hinges on China and that continued demand and actually what is the real intel on the ground, what is really going on in China as far as their food stocks. But for everything that we've seen to paint that picture, because you can't get good information out, is that they're going to be a continued buyer. And so
So let's ask Carly. Carly, what do how do you get some insight yourself on the Chinese situation? Are there places that you get some good, solid information on the Chinese story?
I think it's really impossible to get good, solid, reliable information. And even if we had it, we probably wouldn't know we had it, right? We probably would just question it anyways. Right. So I do talk to a lot of farmers that we have as clients hedging and speculating. And the farmers tend tend to believe the bullish story. They think China's going to be a buyer, and they think this is just the beginning of a big run. They might be right. I've found that farmers tend to talk up their book. We're human. Farmers are human. They're optimistic, so they tend to be that way. Although I mentioned I'm bearish, I wouldn't sell futures against it. I wouldn't jump in front of the freight train, because anybody that's been on the short side of the grain market knows it can be painful if you're early, and even more so if you're wrong. So what we've been doing is just buying cheap puts. If it's going to turn around, it's going to collapse hard. And if you have a cheap put in the way, then you might come out and make a little money out of it. If not, if it keeps going up, it's not going to ruin your life. So
Yeah,
that's how we're looking at it.
That's great. By the way, that is great
Yeah.
information and great advice for people, because you're not suggesting go short, naked the futures themselves. Yeah. That's great advice.
Some people do that, but I don't have the guts to do that. So
I mean, you
couldn't
just
sleep
have to
at night.
have, good control over your risk.
Right.
It's not for the uninitiated just to come
No.
in and say, hey, just because, Matt and Carly think it's overvalued short term, don't go crazy. We're just saying that, this thing could go higher, but when it does collapse, it moves swiftly. And that's the point here. It can move very swiftly down to, 1080, which is not even a full dollar, but it could move down there and it wouldn't even blink and still be very bullish on the long-term picture. So just keep that in mind. What about in the meats you touched on? What about, interest rate products? What do you see there? I'm curious there.
So we've been bearish, the 30-year and the 10-year note, for quite a while. We were lucky enough to kind of work our way out of stuff on that big dip a few weeks ago, and we're flat. And honestly, I'm pretty neutral here. I'd love to play the downside again, but I'd like it to get a little higher first before we start doing that sort of thing. Because I do think that, for example, in the 10-year note, I think the 50 basis point interest rate is going to be a really heavy ceiling for I should say floor for rates. So with that said, I think any big rally in treasuries in the 10-year note or 30 years is going to be a selling opportunity. I just don't think we're quite high enough yet for me to be comfortable doing anything with it.
And again, this is a weekly chart. We've had a big move off of the 118 level all the way up to 140, and now, currently trading around the 138s. And again, a pretty bullish chart on the long-term nature here, but extended, but not crazy extended, not parabolic by any means.
Yeah.
Matter of fact, the momentum, to your point, to your neutrality, is right here in the middle. I just use it for a momentum indicator, and we're right sitting here at 50. So yeah, flip a coin. It can go higher, it can go lower.
Right.
So maybe a some type of straddle type play would be again on the option side, if the premiums made sense, might be able to play here.
Yeah, absolutely. I mean, the interesting thing about interest rates, and this weekly chart is a great chart, because you can see that it went parabolic in March for a good reason. I mean, that was, all these different things going on. But unlike the stock market, which reverted back and actually reversed completely, treasuries never did that. And so I think eventually they will. I think it's just going to take some time, but I wouldn't be shocked to see us. I don't think we'll retest the highs we saw in March, but I think we could retest, like on the 10-year note, maybe the 141-ish area, somewhere in there is probably doable. And then we can, we'll see what happens.
Yeah, I've got my alerts up there, as you can see. So I'm with you up there. I actually agree with that. What about natural gas and crude? Natty had a nice little move, kind of seasonality, if you will, this year from July up. A pretty big move. It's doubled. Matter of fact, if you were smart enough to pick up some natural gas down there at $1.50, man, that thing shot up almost to $3.50 already here. You can see. So,
right.
Any thoughts on the natural gas where we are right now?
So in natural gas, I really don't have a strong position, other than I can say that, I'm sorry, I have to place a trade really quick.
No
I
problem.
apologize. Sometimes during market hours, it's tough.
Even during the slower hours, we can get this. I understand.
Yep.
And you're coming towards closing.
Hold that thought.
Hey, Bob.
Yes.
What are some of your thoughts on what you saw in the pits down in natural gas and oil on the seasonalities? I mean,
one of the great margin calls of all time was a natural gas a play that my brother did. He was actually vacationing in Norway and got the call for a $3.5 million margin call, and he thought it was going to be a $350,000 margin situation. Natural gas is very
Ouch.
dangerous, Matt.
It
I
is.
tend to stay away from the natty. Do they have a micro in natural?
Okay, so now you're absolutely right. Natural gas is, they call it the widowmaker for where I'm from, and there's good reason for that because it does that to people. There is a mini contract, which is half the size of the regular. There's not a micro, but the mini is actually pretty reasonable. You don't want to really be short the mini because you really don't want to be short naked natural gas at any time, because that's where people really get into trouble usually, is the upside, not necessarily the downside.
And that's because, just so people know, it basically does a lot. In a lot of instances, natural gas will actually, what's the, when it maxes out in the day, it basically
Limit move.
goes
Thank you.
yeah.
I was drawing the blank. It has a lot of limit moves. As you can see, these spikes are serious. And during those moves, you can't get out except to.
It can get pretty wild on the upside. Like it only happens once every 2-3 years, maybe even once every 5 years, but it just takes that one time to really ruin some people's lives. So you want to be careful with it. Natural gas, believe it or not, people think that natural gas would tend to go higher during the winter months because that's when people are using it, but it's actually the opposite. It actually tends to dribble down through December. And the reason being that natural gas, like the actual purchase, occurs prior to retail, households using it. And so the seasonal bullish time is actually in the late summer, early fall. And then it kind of sells off unless there's a weather spike, and that's a whole different story. Occasionally we'll get a weather spike and things will go crazy. So I tend to think natural gas has seen some volatility over the last week or two because of contract expiration and option expiration and things like that with the holiday. But I think we kind of creep right back down. I probably wouldn't turn aggressively bullish natural gas unless we got down to somewhere around the $2 range.
Yeah, I'm with you there. And then what about crude? Crude has been sneakily, sneaky, moving higher here, and nobody's really talking about it, but it's at the high of the year.
Crude, the great thing, I mean, nothing that happened in March and April was great, but what I can say is it did wipe out a lot of the kind of newbie rookie traders that used to push the market around a little bit unnecessarily. So things have calmed down quite a bit in oil, and I kind of like it, to be honest. Yeah. But with that said, I think crude oil, there's an OPEC meeting today. Today they didn't really do anything. Tomorrow they're expected to delay production increases. And so the market's kind of priced that in, and we've seen a nice little run on that. Honestly, I think we probably sell off a little in oil. I'm not bearish, but I think we pull back, just digesting back and fill. Maybe 40, maybe high 30s.
And again, the point of control is right back here at 40. So I could see that very easily, pulling back. It hasn't quite rolled for my taste to get short myself, but when it does, it tends to trend very nicely. Again, this move 33, 33 and a half up to 46 and a half. That's a big move. That's
a big move.
40% move again. Not to be, but I'm just curious, and it's coincided with the election. Obviously, the market is more bullish war type activities under Biden, assuming he wins, than it is under Trump. I mean, that's what that chart tells me, right? So
I tend to agree with that. Yes. And also, you have to also account for the fact that if, let's say that he says he's not going to ban fracking, but even if he slowly phases it out by making it difficult for them to make money and that sort of thing, we're still talking about supply issues. So whether it's Middle East or even US shale producers, I think supply, at least domestic supply, is going to shrink a little bit under a Biden administration. That's my guess. And that would put upward pressure on crude oil. So, not for that reason, but in general, I think crude oil is going to see I think we have a shot for the low 60s by early next year.
I agree with you. Now that we're coming into the holiday, the holidays have officially kicked off with a late Thanksgiving this year. I'm gonna kind of throw a curveball on you and ask your thoughts on hot cocoa, on the cocoa trade.
Okay.
Do you? I'm curious. This is not as liquid as some of the things that we've been talking about from the big three grains, but this has had a parabolic spike. Do you follow cocoa much?
I have some clients that trade it. I follow it loosely. I would not consider myself an expert in cocoa. The one thing I can say is if you're looking at that chart, it's feast or famine. There's literally no digestive move. It's either straight up or straight down.
Right.
My inclination, if I were just looking at that chart and knowing nothing about fundamentals, which is exactly what I know about fundamentals is nothing.
I'm with you there. Yeah.
I'd probably be interested in maybe buying a put or two and just seeing if it worked out. Kind of
Right.
a lottery ticket play, but seems in cocoa that's kind of the pattern. So
I'm telling you what I see that chart, Matt.
What do
That
you
hot
see?
cocoa needs a shot of Rumple Mints for
I like
me
it.
to choke it down.
And you had talked a little bit earlier about copper, Carly. Let me bring that one up because Dr. Copper has had a heck of a move and another new high here today. Matter of fact.
Right. So the couple interesting things about copper and the stock market have traded in the same direction about 94% of the time over the last 5-6 months. So they're really highly correlated, except for the last couple of days, it's kind of broken that correlation. But copper's benefited from a stronger equity market. Copper's really benefited from a weaker dollar. And I tend to think maybe those two things might, if not reverse course, at least stop the direction they're going in and pause. And if that's the case, I think copper, the rally kind of fizzles out. Also, another thing going on in copper is it's a thinner market. It's not as liquid as gold or silver. We had first notice day and option expiration and all those types of things coming in on a holiday week. And I think it really caught some traders off guard, and the thin liquidity pushed things around a little more than maybe it normally would. And so I think we're just getting a little bit of a exaggerated exhaustion spike. Yeah.
Yeah. What are your thoughts on kind of the markets overall, macro wise? Do you have any ideas that you'd love to share with the viewers coming into, the 2021 campaign, maybe that are original for you and we haven't talked about? I'd love to hear your thoughts on anything that you kind of have, you're watching.
Sure. So the biggest thing I'm watching is the dollar. If it holds support here, that's going to play a big role in just about everything. It'll put some pressure on almost all the commodities. And even more interestingly, it'll put some pressure on the stock market. If you look at a chart of the S&P, a monthly chart, you'll see that we've actually been trading in a very large, kind of a megaphone pattern is the best way to describe it. And we're up against some pretty good resistance around 3,700. I wouldn't be shocked to see 3,750, something like that, because we do sometimes get more often than not, we get a year-end rally. This year, it's the jury's still out whether we get that. If we do, I think the upside's limited, and I start to really worry about a pretty sizable pullback. I don't think we'll see anything like what we saw earlier this year, but a move to 3,200, 3,000, the S&P is not out of the question.
Yeah, it's amazing this, to your point, and you can see my monthly chart's pretty crowded on the last year or two as far as these price configurations. But the thing that you'll note is we've been in this uptrend really, in this indicator that I use, we've been in this uptrend since, 2010.
Yeah.
And that's long. I mean, how many times, I'm curious, like, have you gone back and looked at how many times we've had like a 10-year trend like this where we literally, it's not a two-way market. It hasn't been for a long time, which I think plays into, that's all Fed, right? That speaks to the easy money FOMC policies. So
sure.
Have we ever seen, in other words, how do you trade something like this? Because we've never seen it.
Well, I mean, it's definitely been a buy and holders market. And you're right. I don't think we've never really seen a run this long. A lot of people argue that the March sell-off kind of negated the bull market. Now we're starting a new bull market. I'm not sure I buy that. I think that correction happened so quickly. I'm not sure you can put it in that category, but everybody has a different way of looking at things. My concern of the market here is we're getting so much speculative interest. I mean, we've got kids on Robinhood buying stocks as if they know what they're doing. We've got a lot of money flowing into leveraged ETFs by people that probably have never traded leveraged ETFs before. And we're getting really big inflows into mutual funds, which is exactly what we saw in February, right before all heck broke loose. And so, we'll see. It'll be interesting to see what happens.
It is interesting because people forget so quickly that, last September through February was one of the most grindy, boring S&P markets I've ever been involved with. It was literally 5 to 10 points a day, every day going up. But also that's all it did. It was 5 to 10 points wide. It was almost untradeable if you're trying to trade,
Yeah, it was a whole different ball game. It's people are really like on the future side of things, a lot of speculators are upset at how high the margins are compared to last year, but I try to explain to them like this is just a completely different game. Yeah, they're not just pulling numbers out. It's literally the volatility is just that huge that those margins are, in my opinion, are justified. So
right. They may not even be aggressive enough, matter of fact.
Yeah, you might be right. Yeah.
To some of these brokers.
Well, especially when you start talking about day trading margins, last year most brokers were charging $500 per contract for day trading margins on an E-mini S&P, which is that not to much. Me, most people, it's impossible to make money if you're using that kind of leverage, in my opinion. This year it's more like $750, but even that is just that's tough. Unless you're perfect, it's going to be hard to turn that around.
Perfect, or you have to be very well capitalized to leg into a position. Yeah.
Sure. Yeah. I mean, if you're not utilizing those discounted margins, sure, your odds are much better. That's actually the greatest thing the CME's done recently is introduced the micro contracts. Even for clients that are trading decent sized accounts, the micros are awesome because they can scale in and scale out. It's a little easier to manage.
Talk about that a little bit. Bob's a big fan, and how have the volumes grown? I'm curious because you probably track that much more closely than I do. But even myself, as you know, I might be somebody who trades, 100 E-minis at times. I'm not trading that size currently, but in this market where it's tighter like this, I tend to utilize, especially when and if I'm day trading, I'll use more of the mini product than I have in the
micro.
The micro product.
Yeah.
Because it's so tight, I have to be ultra careful.
Right.
And it really prevents me from trading bigger than I want to in a tight market, to your point.
Yeah. I think it was a really good move by the CME because they make money based on the number of contracts that go through. So for them, kudos. It was a genius move because what's happening is
it took a while for it to root.
It took a little, it did. It took a little while. And on a completely side note, I hope that they do something like this in crude oil. They've been talking about it for a while, but let's see.
Yeah, because anyway, the QM has never really taken off.
It hasn't. We do have some people that trade it, but it's just not the same. A micro would be really awesome. Right. But what we're finding is people that are trading, let's say they're smaller traders and they're usually trading 1, 2, 3 minis. They might still be trading those, but they're hedging them with micros, or maybe they're not trading minis anymore. Maybe they went to micros, but they're, instead of buying one mini at the market, they might buy a couple micros and then buy a few micros lower and so on and so forth. So they're dollar cost averaging. And I think they feel like they've got a little better control over their trades. So yeah, it's been great.
We need a micro Bitcoin.
Yes. Everybody wants to talk about Bitcoin, but when I start talking to them about the margins and everything, they're like, yeah, never mind. Because the Bitcoin future it's a big contract and it's heavily margined. Yeah. I think if I could be a little off, but I think the margin's like $20,000 the last time I looked. So
you might as well just trade the coin.
Yeah, right.
Which is scary in itself. Bob and I talk all the time.
Yeah, because then it comes with other risks, counterparty risks and all those things. So again, everybody, we talk about Bitcoin all the time. Everyone wants to talk about it, but there's not really that many people that are actually participating. So it's interesting.
What about the altcoins? What are your thoughts on some of the larger altcoins? With Bitcoin, Bob's thesis is until if you watch like the Bitcoin, and I can throw that up here real quick, like the Bitcoin SPOO spread. I don't know. Is that something that you follow, Carly? I'm curious because Bob loves this spread, and I would love to. Let me throw it up here, and it's back at its all-time high, pretty much here this morning. I think it made a new high, but it ticked. Yeah, it actually went higher this morning, and that's the Bitcoin ES spread. I mean, again, this thing is pretty parabolic since June, Bob.
Sure.
It just turned positive again, and believe me, I look at this more from a kind of like a gaming mentality or a sector mentality. If you have money, that you're chasing profits with, it's worth a look anyway, to see what assets are performing better.
Sure. Okay.
And especially in a marketplace where all assets seem to be one. And Carly, we talk about this. I spent some time with a crypto startup. I've looked at the space for a couple of years now, and it floors me the inarticulate nature of crypto investors and their dogged reverence to one coin versus the other. You know, why would you want to be in Ethereum if Bitcoin is, you know, in momentum against it? It's just a sector play, but incredibly in the crypto space, it's kind of like political talk. It's very hard to have an honest dialogue,
right,
regardless of what your opinion of anything is. It's just, what do the numbers say? You know, Matt and I talk all the time how difficult sometimes it is to talk about markets, because I can form my opinion in about 38 seconds. And then how am I supposed to fill up the rest of the segment if it's just either buy or sold to me? And I don't want to argue about it.
Sure. Those are good points. I mean, to be honest, I haven't, aside from Bitcoin futures, because that's involves what I do for a living, I haven't really looked into some of the other coins. And this is the first time I'm seeing this chart. This is an excellent chart. So I'm going to have to go back and take a closer look at that and see if we can get something out of it. But
you know, when it comes to pairs, and I'll respect your time here. I'd love your thoughts on, are there any pairs that you kind of have in your cross sights right now that you're interested in being involved with? Because from a spread to a pair, right? And I'm always curious, because you may have found some things maybe our viewers haven't seen before, and I'd love for you to touch base on something that looks intriguing on a pair basis.
So I mean, I wish I had something magical to say, but I truly don't. We don't do a whole lot of spread trading, whether intra-commodity or inter-commodity. For some reason, I just haven't found a way to find an edge doing that. I've got some clients that do it, and they do a lot of seasonal spreads and do just fabulous, but it just, for whatever reason, hasn't really ever worked out for me. I prefer option trading. I feel like I've got a little better handle on the risk with that sort of thing. A lot of the spreads, especially if you're trading between two of the same commodities, just different expirations, I've found that they literally go nowhere almost always. And then when they do spike, if you're lucky enough to be in the right direction, that's great. But if you're not, then not so great. So yeah, just not something I've ever done a whole lot with.
All right. Well, I want to thank you for coming on, Carly. We'll let you drop off here, and we appreciate your time this morning, and hopefully you'll be a regular here at the Market Vital Show.
Yeah, thanks for having me. Appreciate it.
Carly, where can the trading public find you exactly?
Okay, so the best place to find us, and you'll find lots of educational material, it's free, videos, articles, things like that, is decarleytrading.com. It's spelled DECARLEY, trading.com.
Just like her backdrop.
Yep, just like the backdrop. Yes.
Thank you so much, Carly. What's the weather like in Vegas?
We're like high 60s, so it's pretty nice here.
Hey, I gotta ask you. I should ask you this to start with, but what's the feeling? What's the emotion like in Vegas with everything that's going on? It's open, right? It's not like here in Oregon, we shut down restaurants again for 2 weeks.
We're kind of open. It's actually it's pretty depressing here. So restaurants are open and casinos are open, but at 25% capacity. So businesses can't make money at 25% capacity. So it's really pretty depressing, but I can see the tourism is starting to show up, but only on weekends. Most of the casinos are open, but not all of them. So that's a good sign. Even at the lower capacities, at least there's some bodies moving through. But the most depressing thing that I've heard recently is a handful of them have decided to close during the week and only open up on the weekends. So it's just kind of hard to imagine. I mean, a couple of years ago, I don't think anyone could have ever imagined Vegas being like this. So
no. I mean, of all places, right? I mean,
yeah,
it's shocking.
In March, the Strip was like a giant running and biking course. Like all the locals just went down and exercised on the Strip because it was closed. Everything was boarded up. Right. So it was really sad to see, though.
Yeah, that is. and they can't go on forever that way. That's for sure. I mean,
No,
the carrying costs just to turn the lights on are huge.
absolutely. And it's just weird things are happening. Like, for example, the Paris had an issue with, because it had been closed for so long, the rats came in and chewed up all the electrical lines. And so they had I mean, just stuff that you would never even count on. Just
Yeah,
weird stuff.
so the exterminators are doing great in Vegas.
Yes, that's probably true. Yeah. So it's a challenge, but Vegas is resilient, and so I'm confident we'll come out of it, but it's really tough.
One more question, since we're on the
Mhm.
Vegas topic. Have
Okay.
you, and it's not your sweet spot, but what do you think about the sports gaming stocks? Let's just talk about Penn and DraftKings and FanDuel. Like, what do you think? What's your gut?
Sure. I mean, so I can't really speak to the stocks, but I can say the industry as a whole, I think will be just fine. I mean, that's the one thing that people have turned to in this time of crisis. They can't go, they maybe can't play the tables, but the sports betting has been really hot. So that's nice. Yeah. And even in Vegas, you can do a lot of it online. You have to have accounts at the sports book, and register with them and things like that.
So
But you can actually do it
once
online.
you've provided all the documentation, you got your tax
Right.
stuff in there, you can
Yeah.
then go home and place your bets,
Correct.
from your
Yep.
laptop, which is cool.
Right.
Yeah.
Yep.
That's interesting.
Yeah.
All right. Well, Bob and I are going to talk
you.
a couple more things. We'll let you drop here, and we appreciate you coming on today at Market
Thank you.
Vitals.
All right. Thanks a lot, guys.
Thanks,
Thank
Carla.
you so much, Carly.
You're welcome.
All right, Bobby.
Matt.
Great having Carly. She's always straightforward. I love, you know what? There's not a ton. Unfortunately, I've always said this. The women in this business are the smartest people in this business, and there's not enough of them.
Absolutely, dude.
There's literally 95.5. I mean, out of all industries that could use more, female brain power and pragmatic brain power. I think women, I say this all the time, and people look at me like I'm crazy. I'm like, the thing about trading is you get 20-year-olds every generation think they're smarter than the next guy. And whether it's the Bitcoin holders or, the people that are chasing these EV stocks, women don't, they're more pragmatic with their finances. They just are. I really believe that. And from an emotional and from a psychological, they're not tied to the dollar like the male brain is at the 20-year-old level. So,
Matt, I want to, before we leave here, I just want to share what I'm seeing here. And we talked a little bit about this. I know that you shared inside the group the non-US stock markets and the seemingly rolling over. And in fact, the Chinese market dropping a deuce. But this is the Russell. It's fully flirting with closing out of that momentum level for the first time since it made the run, right? SPOOs, again, looking to close out of the momentum level. NASDAQ actually pinged it and had a nice reaction off of it. Coupling that with the 30-year, and it's looking like it wants to go into up momentum. The writing is for sure for me starting to show up on the wall. It hasn't closed there. We haven't had a close yet today, but I am particularly paying attention to this, that maybe there isn't everybody's looking for the year-end rally. And back to the kind of like my thought processes on where these things are and where they came from. It seems to me like the market is pricing in an absolute perfect, bullseye recovery on all fronts, and that there's no risk anymore, that and everything's fine.
Yeah, and I think a lot of that is that it's expecting or trading as if it's going to be a perfect political transition, which still we're 2 weeks from the supposed electoral vote. If that vote doesn't happen, I'm telling you, the volatility is going to go through the roof, and you better have some protection to what Bob just said, because the market's acting as if this is going to be smooth, simple. I just don't see it. I just don't see. I mean, I still see the angst. I mean, you listen to Carly just talking about Vegas has not come back. To me, that's shocking. Like, you have enough, especially with all the people you have in LA with the restrictions they have. and Santa Clara, in the Bay Area. They've basically shut those cities down for the remainder of the year. Why would you stay there? Right?
Yeah.
So those people, it's an easy day trip driving to get to Vegas. Why aren't they all rushing to Vegas just to have some fun? And like you said, Bob, we're all tired of like being locked down and being restricted like this, especially when, anyways, we don't want to get into it. Let's
not get into it, Matt. But here's the bond fully now back into up momentum. And, I don't live or die by the momentum level, but I absolutely, I will not marry a position that can sit, that isn't in line with the momentum. I found for over 30 years, it's the best thing to keep you out of trouble. I mean, have an opinion, that's great, but please mind the mo, pay attention. And I know you have the same thoughts about the profile and where the congestion is, and are we, in value or out of value? You have to have something that you can concretely say, I don't care what I think. I got to listen to what the chart and what the setup is telling me.
Yep. It's interesting. I'm watching your tickers flip there, and the NASDAQ is almost back to flat for the day, which is
for sure.
But the S&P and the Russell are weak. So again, it's flipped. We were talking about this last week. The Russell and the Dow and the S&Ps were running, and the NASDAQ really was lagging. It still hadn't made new highs, and it still hasn't. Neither has the S&P. So the Russell and the Dow made new highs last week, but the S&P is very weak again today, and the NASDAQ still, even though it's close to break even, hasn't taken out that high from the Biden spike. So we're close. It was like 12.4 or so, 12.5, and we're at 12.250 or so, but we're close. But a lot of divergences going on, and these are usually, to me, unexplainable and warning signs. And again, with this 2 weeks, we're finishing a great month. I mean, I don't think we've seen a market like we saw across so many assets.
Yeah, I mean, you pull up these monthly candles.
I mean, everybody, this is a month that makes the amateur think they're smart, right, Bob? And this is a very important point. Don't think that you're smart just because every freaking thing has been through the roof this month, from stocks to indices to bonds. Everything is bullish except for gold.
Right. It's complete risk.
That's a divergence again.
Yeah,
I don't get it.
Exactly.
I don't get it.
All right, Matt. Listen, man.
Hey, Bob, you want to talk? I gotta throw up that tweet I sent you from Zero Hedge.
Oh yeah.
I want to get you. I want you to. Give us your Discord on this.
Let's ruffle my feathers, Matt. Yeah, let's ruffle my. Who are you, Conrad Dobler?
You should have
the young kids don't even know who Conrad Dobler is.
Because people don't even know who that is, Bob.
Right. Who's Conrad Dobler? Well, I'll tell you who he is. One of the great instigators of verbal abuse on an NFL football field ever. Yep. Here's the tweet, Matt. World Health Organization: skiing, like travel, needs to be a risk-managed approach. Here's the thing that I don't get. Skiing, like in general, I wear a face mask, so I'm already masked up skiing. Like,
and you have gloves on.
I got gloves. I got a helmet. It's freezing out. There's a fair amount of ambient air around me. China's WHO now fully getting involved with my life about my ability to ascend.
Wait, Bob, it's not China's WHO, but it is indeed. They are the ones.
Facts. Come on. Listen, Matt, this might be unpopular, but we live in the age of irony. And if you do not believe that China is our foe, I think you need to revisit what's going on. It's amazing to me, the irony at play in China, because let's face it, there's a shit ton of money to be made. Dealing with China, dealing in China, China has ranked, they have rung the register over the past 3 decades incredibly. Their bankroll is very deep. They wrote I'm not sure if you're familiar, but they wrote a whole 25-year kind of like a blueprint for the next 25 years. And when they wrote it and published it, the rest of the world was sort of taken aback and aghast at basically imperialism 2.0, and how they wanted to control the world, basically, especially in lines of business. You got to wake up here, man. You got to wake up and understand that that is the threat. Globalism is going to end with, one major, that's how it goes. That's how colonialism worked. Like the strongest power ruled the world, ruled the earth.
Again,
I say this, man.
China ruled the world, what, 1300 to 1600?
They have some experience doing it for sure. The only way you can fight this is with our own individual pocketbooks. Listen, man, hyper-localization. In this day and age, what do you, honest to God, if you sat down and said, I absolutely need this thing from China, give me a list of what it would be. Because, and I'm talking, my life depends on having this. And I got to tell you, when you really evaluate your life and your needs, I'm pretty sure not a lot of it has to come from China or anywhere else that for that matter. The technology is through the roof. You can grow food in a desert now. Sure. Anyway, that's my thought. And this really pisses me off if they, and I know you have inside information for the local ski community, but it's not looking great for us to be riding chairs this year at Mount Bachelor.
It's not looking great anywhere because of these types of approaches and shutdowns. And it's truly astounding when 99.9% of Americans have not died from COVID.
Yeah, well, all right, listen, Matt, you have a great day. I don't know what I'm going to do, Matt. I want to go skiing, but I actually have a, say it again.
Go slam your finger in a drawer, Bob. Because
I got to tell you,
skiing's only going to be allowed. Hey, the COVID only takes over on weekends and Thursdays and Wednesdays, but Tuesdays you're going to be able to ski, I think.
Slow down. Matt, I feel like I gained 15 pounds over Thanksgiving. I got to tell you, I ate pretty good. My face feels swollen. I drank too much.
Well, that's the booze. I
think I need to do a little skiing, and the WHO better not get in my way. That's all I'm saying. All right, Matt, thanks, pal.
F the WHO is what we're saying.
Right on. I will talk with you soon.
Bobby, as always, I'll see you this evening for the Monday Night Football Thanksgiving Friendsgiving. We'll be
right
doing
on,
that.
man.
Right.
I will see you. Right. Thank you.
Peace.